Most investors follow trends. Very few develop edge. This show focuses on something different: how serious operators build durable wealth in overlooked niches, starting with mobile home parks. We'll break down the strategy, underwriting, discipline, talk about the roadblocks, and the operational execution that'll make your capital aligned with long term returns. This isn't about chasing deals. It's about thinking like an allocator and executing like an operator. This is the Mobile Home Park Exchange. Welcome back, everybody, to another podcast of the Mobile Home Park Exchange. I'm your host, Frank Rizzo, and today we have something a little bit different for you. We're talking with a gentleman, Marco Ali. He's the founder of MNA Capital Group, and he's a multifamily operator. And he made the pivot from investing as an LP in roughly 200 units to now he's a GP, sponsoring his own deals and doing it from the other side of the table. And we talk about how confidence, you could build confidence from observation, but competence is built through ownership. And we're going to discuss with Marco what's been different from one side of the table to the next. And, Marco, welcome to the program.
Yeah, Frank, I appreciate you having me. Both New Yorkers. I know you're from Staten Island, so I'm excited to get into this.
Yeah, I love talking to somebody, especially, you're based in New York City, in Brooklyn, but you're primarily focused right in kind of an area that we've been very focused in. Like, you have a very specific thesis of where you want to be. Maybe you want to explain that to everybody before we get started.
Yeah, so as you mentioned, I founded M&A Capital Group about a year ago, and our focus is workforce housing in North Carolina, specifically along the I-85 corridor, which is the main highway that runs through North Carolina. And the reason for that focus is for a couple things, right? And first is North Carolina itself, and as I'm sure you're aware, Frank, and some of your listeners, this state is one of the fastest growing states in the country, right? It has job growth, population growth, it's business friendly, it's landlord friendly. So being from New York and hearing some horror stories from, friends and family who invested in real estate in New York, I didn't want to go down that route. So I was like, okay, let's focus out of state. And then secondly, the focus for me is how I could create my competitive advantage. So whether it's I'm going through an investor or analyzing a new deal, if I look at the same market or markets in North Carolina over and over and over again, I'm able to, recognize whether a deal is a good deal. Is insurance too high on this deal? Are they paying too much in payroll? Are they paying too much in utilities? You know what I mean? A bunch of different things. So that focus is really for two reasons. One, I wanted to be in a high growth state, being from New York. And secondly, I believe it's a strong way to build an edge and a competitive advantage is to have a strong focus.
You know where I think that really helps, because, and I say this from 25 years of being in real estate as an agent, as a broker. And if I had, a dollar for every time somebody had called my office and said, I'm looking for a deal, without defining what they were looking for, I wouldn't have to do anything that I'm doing right now, right? Everybody says, I'm looking for a deal, but by defining what you're, and I don't like the term buy box, because I like, it's a filter of what you want to see, but you have a clear lane of, hey, what am I looking for, right? Multifamily housing, workforce housing. Where am I looking to find it? So you're defining that real specific, and then you're getting to know that market inside and out, because that will help you on the learning curve, rather than trying to say, well, am I looking here? Am I looking here? Am I trying industrial? Am I doing iOS space? Am I doing, am I looking for single family rentals? Like, clearing that up definitely gives you an opportunity to see where you want to be.
Yeah, it gives you more confidence. Like you said, if I started looking at industrial deals in Texas, I wouldn't really even know what to look for, right? What makes this a good deal? What makes it a bad deal? The only way you could start to develop that confidence, I think, is just doing the reps consistently. And then over time, right, you could build scale as well. But it's, there's a bunch of different, I think pros that come with having a focus.
So you talk about you've invested passively in a number of deals first, right? So you're a passive investor. You didn't start out, coming on, running the deal as the operator side. Like, what gave you that confidence, or what gave you that that the opportunity to say, hey, I'm going to make the jump, and I'm going to start, running the deal? Is it something that you looked at and said, I could do this too? Or is it something, what was that?
It wasn't 100% a confidence thing, because going into something new, right, there's going to be doubts, you're going to question yourself. But real estate is something I knew I wanted to do, and after investing in it passively, to start, I was like, I see the business model, I see how this works, and I want to try and grow my own business within the multifamily space. So I said, you know what, I'm just going to jump 2 feet in. I'm going to use a network of people that I kind of already developed, ask for help, ask questions, and just jump 2 feet in, because you're never going to have all the answers, right, when starting something new. So it was kind of just having the courage to take the leap about a year ago and start my own business.
One thing I'll preface that with, Marco, it's, you'll never have all the answers, even if you're 20 years into it. So always ask me those questions. Don't. And there's times where I'll pick up the phone and call another operator, or I'll call somebody else, and I'll pick their brains, because you'll always run into something a little bit different.
Yeah.
I've heard you say that one of the philosophies you've had in your life, right, which you could expound on a little bit, was that you have to put your boots on every morning and go after it, right?
Yep.
So it was that part of it. Like, was that, that philosophy that was kind of embedded in you, and where did you come up with that?
Yeah, so that's actually a quote of my father's. He's a huge inspiration to me. He's first generation Italian American. His parents came from Italy. They didn't have much, and 25 years ago, he started his own construction business in New York, and he's always told me, he's like, you know what? I'm not the smartest guy in the room. I'm not the most intelligent, but I just tied my boots every morning, and my goal was to just try and outwork everybody. So, I think the keys to success is not always trying to be the smartest person, but it's the guy who works the hardest, who has the most perseverance, and just doesn't quit. So that's kind of the philosophy I take into my business. And, kind of what you said, even 20 years into it, you don't have all the answers, right? And you've been doing it a lot longer than I have, quite frankly. But you're still tying your boots every morning. I'm sure you deal with some struggles, you have some failures still at 20 years, but it's about waking up the next morning and putting the boots on and going to work.
It's interesting, because when I heard you say that, similar to you, my father, first generation, immigrant, he was Italian, and his philosophy was that if you want something, you have to earn it. Like, you have to go out there and earn it. Like, you're not going to be handed anything in life. And he would do the same thing. Like, his thing was, he worked, he would take every opportunity for overtime to take it. He would do it, because that's, to him, was the way to get ahead. And that did instill a work ethic and philosophy, right? That there's a lot of variables you can't control, right? You can't control, who, where you come from, or your background, or where, the network that your family might have, but you can control how much output you're going to put in and where you're going to take that moving forward. So I think when I heard you say that, it kind of resonated a lot with me in my story of what it takes to move you forward. Where have you, in implying that philosophy to your life, like where has that standard made you money? Like, and where do you think maybe it's cost you?
That's a great question. I think I feel like just working hard over the long period of time, right, and not quitting, is, especially if you're taking the entrepreneurial route, right? when you start a business, the beginning stages are never easy. There's, whether you want to call it the snowball effect or the J curve, those first few years are usually the hardest, and there might not be much money to be made because you're still developing your reputation, your track record, whatever it may be. But it's kind of just betting on yourself, knowing that, okay, if I stick with this over a long period of time, the money will come. So it's not necessarily about, let me work hard so I can make money. It's like, let me work hard to grow my platform, to grow my reputation. And I believe in myself. If I do the right things, if I treat people the right way, and I say what I'm going to do, in 10 years from now, the money will be there. Someone's holding that check. As some people say, it's like you're 1,000 no's away from, the check you want or the money you want. So the hard work part is not even so much about the money, but it's more about betting on yourself. And in the long run, you could create a fruitful future for yourself.
Yeah, I think the money is a poor motivator over time. Like it's a good motivator in the short run, right? But over
Yes,
time, if it's just about the money, then when you get those no's, you might say, I'll look for something easier to get,
exactly.
to make that money.
Exactly. Yep.
But 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 you last year, right? Correct me if maybe this is I got this information incorrectly, but you last year submitted something like 90 deals, right? Like, didn't you underwrite something like 90 deals before you hit
Yep.
on one, right?
Yeah, and the number, quite frankly, Frank, might be larger than that because whenever you read that from, might have been the end of 2025, and we didn't close on this deal until April, so it was probably 100 plus deals I had to look at, and almost a year before we could finally close on one. So it's really about just staying persistent and staying disciplined too, because in this space, and some of your listeners may or may not know, it's not an easy time right now, and especially in the multifamily space in the Sun Belt, there's a dislocation to where sellers want to sell their deals and where buyers are willing to pay for them. So and at the end of the day, it's your fiduciary responsibility as an operator to do best by your investors and try to make them money. So you don't want to just go out there and get excited and buy any deal. You want to buy the right deal, even if it takes a year and underwriting 100 deals. That's just unfortunately what it's going to take.
And I use this analogy, and for those of you that don't know Marco was a Division I baseball player, right? But I've
Mm-hmm.
used this analogy with my team, right? Plenty of times. Like in baseball, you get 3 hits out of 10, right? You're batting 300 and you're going to the Hall of
Yep.
Fame, right? But in this business, you don't even have to be that successful to be very successful. You can put out one offer, and you could get hit 1 on 50, but it's that one deal that you get hit on that could really work in your favor. So it's about the persistence and the consistency of doing it, in that action, and knowing where you want to be, because eventually something will happen, but it's that persistence of going through. Like, what kept you going after 20 rejections, right? Where I think a lot of people say they want to, hey, this is what I want to do. You continued on it. Is it that, where did you get comfortable with saying this isn't failure, this is that next step?
Mm. And it's alluding on what you said. I played baseball, and I think that mindset that I learned from being a successful college baseball player kind of helped me get through the struggle of failure, right? Because like you said, in baseball, you fail 7 out of 10 times and you're a Hall of Famer. You're a great hitter. So I learned those lessons of how to deal with failure and just focus on the process. You can't always be result oriented. You got to focus on, am I submitting offers? Am I underwriting deals? Now, I can't necessarily control if I'm winning every deal I submit an offer on, right? But am I submitting offers? Am I growing my network? Am I learning more? And am I getting sharper with my underwriting? And you just have to truly believe, if you're doing the right things and you trust the process, that eventually, if you don't quit, that's the second half of the equation, right? Some people, they might do it for a year and they're like, this isn't for me. I haven't done any deals, so I'm quitting. But eventually, I firmly believe if you work extremely hard and you just refuse to quit, things will start to go your way.
So so now you get your first deal, right? And you've sat passively on the other side as an LP. What's the thing that's different, right? Because wanting to run a deal and putting offers in is one thing, right? But operating the asset is completely different. Now, do you self manage it? Did you just hire a third party? Are you acting as the asset manager? What's your process there?
Yeah, I'll first say from being on the GP side of my first deal, I almost understand the value of being an LP, right? Because it takes a lot of work not only to find a good deal, but also to manage it. So, from the LP standpoint, if you find an operator or a sponsor you trust and they do good deals, they have conservative underwriting, and they have a good track record, you might only be giving up if you're looking on a project level return versus what the LP's making, maybe a percent or two, but you don't have to deal with the headaches of asset management calls or finding the deal, negotiating the contract. So that's one thing I wanted to add, and it's something I've been thinking about recently is how valuable actually having the opportunity to be an LP can be, because you get the benefits of investing in real estate, but you don't have to deal with the day to day. And on my side of the coin, I deal mostly with the asset management. We have asset management calls once a week, actually once a month. Excuse me, it was once a week. We transitioned to once a month. But one of the other general partners on the deal has management in house, so they're the ones managing the asset, and then we all get on an asset management call.
Got it. Got it. So from the day to day, what you did was you have a partner that has more operational background, and they're bringing that in.
Yep.
You're okay. Okay. So was there something now that you're looking at it though? Was there, there's always, you don't know what you don't know, right? So you
Yep.
you you have the best intention when you acquire the asset, and all of a sudden something inside of that first 90 days is different than the initial budgeting, underwriting, or some surprise. Was there any surprise that, hey, I didn't realize that this could possibly happen after you acquired the property?
Yeah, the first week of ownership, actually, one of the residents by accident ripped the sprinkler system out of the ceiling and flooded the unit. And now it was our responsibility to figure out how to deal with it, renters insurance, etc. So what's I think it's called Murphy's Law. When anything could happen or go wrong, it does happen. So it was kind of a wake up call. It's like, okay, now it's on you to figure out what happens. Um, and just kind of going through that process and learning through people with a little bit more experience, who have more operating experience like you said, and kind of picking their brains as well and learning that way.
So going forward, when you start looking at the deal from the different aspect of it, from, hey, now I'm on the inside and see what it's like to actually operate this. Does that change your underwriting? Does that change
Mm.
how you're looking at these deals as you're reviewing them now?
Yes, 100%. um, Multifamily, if you're buying a multifamily asset, if you're buying an apartment, you're essentially buying a business with customers who are your residents, right? And whether you're in a good location, a bad location, the tenant demographic, that's going to affect, you know, how the tenants might treat the property, what you need to spend on make ready costs, etc. So, you know, kind of understanding what you're buying, what type of assets, where it's located, greatly affects the operational complexity of the asset itself. So, kind of after this first deal, it's really, it's not just about the numbers. It's really about the asset itself, who's living there, the type of tenants that are living there. Is it, young adults who are more in and out, they have a job, they have a corporate job, or is it workforce housing? For us, we focus on workforce housing. So it's a little bit more hands-on and it might get a little bit more messy, if you will, but you could kind of combat that with being in really good locations, and running a business, or AKA an asset, right? That, you know, promotes residents to treat the property well, and kind of you want to provide a good customer experience at the end of the day, or a good resident experience, right? And that matters a lot, and that's something that I've been really honing on lately. It's you own a business with customers. It's like, how can we provide good customer satisfaction? Because usually if they're happy, they're going to treat the property better. They might, pick up a piece of trash because they feel like it's their home. So it's really about running a business and thinking about it through that lens.
That's a great point. I mean, for us, where we're focused in the manufactured housing space, we
Mm-hmm.
look at, you have to provide a customer experience. Like, our people on the ground, they'll own their homes, they're leasing the land, but we want to make sure that their experience and the culture that we're building inside that community, not only do they want to stay there, but that they become our raving fans, right? Like, that they are going to tell friends, family, coworkers, cousins, uncles that this is the place for them to be. And we know we're doing our job well when we have certain spheres of influence, people who are referring people in, because that means that they're happy enough to tell the people they care about to live there. And that, to me, right, that only happens because we focus, like you do, is on how do we make sure that that resident experience is providing that value. They're not going to do it if they're not happy. If they feel like we're not, we tell everybody we're not local, but we're very hands on. Right? You have on-site management. You have our team that's there, and they have to feel that sense of community, and that's
Yeah.
extremely important. Right
Mm-hmm.
now, is and I've heard you talk about this, especially for someone like yourself, younger guy who's breaking through, and now you said you've partnered with somebody on the GP, but you've had a couple of mentors along the way that have kind of assisted you in your growth, correct?
Correct.
Right. So, I mean, how important was that, right? Because I know there's people, everybody wants to be quote unquote self-made, but having that, you know, person to lean on, how has that elevated you further, faster?
Oh, it's huge. I would argue it's everything. I mean, being able to lean on someone and ask them questions who have more experience than you, and you could even do that later on in your career, right? I know people who have been in the business for 10, 20 years and they still go to their quote unquote mentors, right? So I don't think it's something that needs to only be explored if you're getting into something new. It's whatever it is you're doing in life, you want to be in a room with people who are better than you, right? Who know more than
Mm.
you, and who have more experience, and learn from them, even if you've been in the business for a while. So I think no matter where you are at, or what stage you're at in your career, finding people or quote unquote mentors who could kind of guide you to the next step, if that's your plan to continue to grow, is I would argue essential.
So, so you you've decided on this corridor in North Carolina. Did you spend a lot of time down there? Like, how did you just you know hone in into that area? Like, what was it that brought you there?
Yeah, so it was, I knew I wanted to be in a growth market. I didn't want to be in New York, and North Carolina stood out to me from all the metrics. And, I finally flew down to Charlotte for the first time, I want to say a little over a year ago, and I loved it. I saw the growth. I see why people want to move like a city like this. And after that, I've been down there, I want to say once a month since about a year ago, whether it's touring assets, meeting brokers, meeting other operating partners, lenders, etc. And the more I continued to go down there, the more I fell in love with it, and could see the growth.
Got it. So, in for us, as we've gone there, one of the things that I think that we found very interesting about North Carolina, going down, and my partner and I used to drive down to Alabama and Georgia, which was just 15 hours in the car.
It's a good trip.
It's a long trip, right? So we won't do that anymore. But getting in the car and driving down to North Carolina, which is like half the distance,
I've
becomes
done
like
it once.
super easy. Yeah, which is super easy. It's like, I'll be there by lunch, right? No problem.
Yeah,
I'll get
yeah.
there. And I could even so we actually had a trip this past week because we were down Sunday, came back Monday night, like just driving, back and forth. as we were meeting with some engineers on an expansion plan. But it's a real interesting dynamic that's going on down there because you have people from the north who are moving down. You have people from we actually have a lot of transplants from further south, like people from Florida who are getting
Yeah.
priced out, and they're looking at the Carolinas as a so it's like this perfect sandwich right in the middle, and it's been a real interesting market. Now, how are you dealing with that competition? You're starting out, and there's this um, huge, institutional capital, a lot of capital pouring into that market. Like, how are you finding your lane and figuring out how to compete with that in a market that's just drawing capital in right now?
Mm. Yeah, that's a great question. And a short answer would be it's difficult. But to kind of expand on that is we focus on the sub-institutional space, 50 to 150 unit range. So there's not as much sophisticated capital and quote unquote competition, but by no means there's still a lot of people in that 50 to 150 unit range that want to buy quality assets in the Carolinas for all the reasons you listed. And it's just about kind of going back to what we were saying before, you just have to be persistent. You can't quit. You have to develop exceptional relationships. I mean, real estate is a relationship business, and you're going to find the good deals from the brokers by building great relationships with them. So, continuing to, be on the top of the minds of the brokers and, even other owners, developing relationships with owners, because you don't know, maybe in a year or two from now, they might be wanting to sell an asset. And they're like, oh, this fits Marco and M&A Capital's box. Maybe we'll give them a first look because we have a great relationship with them.
You know, Real estate is the ultimate people's business, right? It's never about the
Yep.
bricks and sticks. It's always
Yeah.
about the people. But and you hit the nail on the head. Even though there's a lot of competition in that space, like if you could stay in that under institutional buy box, right, where it doesn't make sense for them to write a check for $3 to $4 million, right? That's not the check
Hmm.
that they want to write. It's because it doesn't move the needle, but they'll buy. But if you can aggregate 10 of them, they'll write a check for $30 million, right? So that's where that space becomes interesting. But buying the one offs, that's where they can't. It's too hard to turn the ship, right? To
Hmm.
add that, so that
Yeah,
becomes a play for where you can be more nimble and be a little bit more
exactly.
creative to get something done. So your first deal was a little creative, right? Like you
Yes.
had to add a little
Yes.
creativity to that. So you want to share, like, how were you able to get that to the finish line? Because like you mentioned to me before, it took a year 2 years to close that deal, right?
Yeah, yeah. The deal was an interesting deal. It's the 98 units. It's called Sharon Oaks. It's just south of Oakhurst, which is around 15 minutes out of Central Charlotte. Um, and to your point on the creativity, there was $2.1 million of 0% financing from the city of Charlotte that was assumable, in turn to keep, a certain amount of the units affordable and lease them out under a certain amount of AMI. And that expires actually in 8 years. So our business plan is to hold it for 7 and then sell it so the next owner could either, continue the affordability, or if they want to bring it to free market, they can.
Okay. So, and why, just out of curiosity, why did it take so long for that to get to the closing table? And what kept you driving? Was it something with the city getting them to transfer that loan, or was there something else that was involved there?
From finding the deal to actually closing the deal, it took, I think we first found the deal, I want to say end of December, and we didn't close until April. And one of the big problems we had was actually with the lender. Since the affordability component, part of the business plan is to apply for a tax abatement. And right now there's a lot of turmoil around tax abatements in the Carolinas. And we underwrote the deal if we weren't able to get a tax abatement, and it still worked. But we obviously, part of the business plan is to try and get an abatement. And the agency lender that we were first originally planning on getting financing from got cold feet and backed out. So then we had to pivot and then go to Santander Bank to get our financing. So it was a little bit of turmoil to get the financing together, but we were able to get it across the finish line.
That's listen. That's the main thing, and being able to be nimble to get that done. That's a huge part of it. Has anything in the last year, because of everything that you've learned going through this process, because of all the deals you put out, do you underwrite your deals going forward a little bit differently? Like, what lens are you looking at it? Do you feel a little bit, are you a little bit more confident to go up to change your pricing metrics a little bit? Or are you a little bit more conservative because you realize, hey, there's some things in here that I don't know?
I actually think I am tending to be a little bit more aggressive. When I first started out, I was ultra conservative. I underwrote deals in the most conservative way possible. And, seeing operations compared to how I underwrote the deal, we're actually performing better through our first quarter than what we projected. So, there's rooms where you could push, there's things that you could push, whether it's occupancy, and you kind of learn it as you're operating the asset. And now you're underwriting a new asset and saying, okay, I thought occupancy was going to spike a little bit. We're keeping people in place. We want renewals. We want to have low turnover. And it's not necessarily a bad thing, right? I think it's better to underpromise and overdeliver, especially to your investors. So I kind of keep the same reference when underwriting deals of being conservative. But I'm finding little ways, whether it's on the expense side or the revenue side, to push it a little bit, because at the end of the day, if you're too conservative, you'll never win a deal, right? You have to be, if you win a deal, especially if more than one person saw it, you're going to have to pay more than everybody else. And you have to have a belief that, you could operate it better than everybody else, and you could operate it to what you're projecting. And the only way to really win deals, like I said, is, you have to pay the highest price, especially if other people are seeing it.
Well, when you're in a good market and you're in a market that's drawing interest, you're right. I mean, the only way to get the deal is to be the highest bidder. No matter how
Yep.
great of a guy I think I am, they're not going to sell it to me. Now, you do get sometimes the surety of close, right? After,
Yeah.
but when you're, and that I think works in certain niche asset classes, like in MH, having that surety of close really helps some cases. But you're right. You're not going to get a huge discount just because you're Marco or Steven.
You're a nice guy.
Because you're a nice guy, right? They want to know that, the sellers want to know that they've got a deal that works. So, Marco, if somebody wants to find out more information about MNA Capital, where would they go? How would they reach out to you?
Yeah, they could go to our website, which is just mnacapitalgroup.com. Or if you want to shoot me an email, it's marco@mnacapitalgroup.com.
Great. Marco, anything that you're working on now that you want to just share with anybody, so if they want to get some insight in terms of what you're looking at, what would be the vantage point you're looking at now?
Yeah, we continue to source and underwrite deals. Like I said, along that I-85 corridor, we're actually continuing to see a little bit more sellers who are, coming to market, whether it's pressure from their lenders, pressure from preferred equity. I've seen things like that as well. Pressure from, maybe just LP equity. Hey, we've worked through our second extension, and, let's just get out of this. Let's cut our losses. So we're continuing to see more of that. And I think people who stay disciplined and patient and buy the right opportunities today, especially in a high growth market like North Carolina, are going to be set up well for the future.
I think that's a great point. You need discipline. And I think you're starting to see people who bought or overbought over the last few years, they're coming up to that rate clock where things are going to reset. And I think you're starting to see some of those deals trickle into the market. And I think you're in a great spot to be in that corridor, and I-85 corridor in North Carolina is experiencing tremendous growth. And Marco, I'm wishing you continued success. I'm sure we'll hear more about what you and MNA Capital is doing. This has been another episode of the Mobile Home Park Exchange podcast. If you found value from this episode, do us a favor, rate this episode on the streaming platform that you're listening to this on, because that's how we get this message out to more people, and we get this podcast out to more people. Until next time, everyone, this has been the Mobile Home Park Exchange podcast. Happy investing.
Thank you, Frank.
Thank you, Mark.